Imagine this. Your washing machine breaks down and you have to change it. You look at your bank account and you realize that you do not have enough money to cover such an expense. You're living paycheck to paycheck. You panic. You're forced to use credit cards to face this situation, and interest rates are going to kill you. Sounds familiar? 1 in 3 Europeans is not able to face unexpected expenses. We're talking about 250 million of people that are not able to withstand an unexpected expense. Today we're going to discuss 4 principles that are going to help you to save money and face unexpected situations, so you can get in control of your personal finances once and for all. Hi guys, I'm Giuseppe and I am a finance graduate and money nerd. Just remember, this video does not contain any financial advice. Now let's start with the first rule. That is, live below your means. In US there is a strong culture around living fancy thanks to credit cards and debt. In one sentence, living above your means. In Italy instead we have a very strong saving culture, to the point that it is an issue. But there is a simple concept that we can learn from this, and it is living below your means. Are you making 2,000 euro per month? That's great. Learn how to live with 1,500 and save the rest. I generally suggest to have a 20% saving rate. That should be reasonable for the majority of salaries. 10% should be the bare minimum in any case, and I personally shoot for 40%. You can improve this by tracking your expenses on a spreadsheet every month and review them at the end of the month to see what you can do better. Some common expenses that you can review are usually your subscription, especially ones that you are not using or are overlapping over other services. Your groceries, preferring to buy in bulk, considering eating out less often and cutting off on delivery services, and reviewing your transportation habits. The majority of people has room to save something, but not everyone does. Learn to live a little bit uncomfortably and see your bank account flourishing. And from this suggestion, you're gonna be in a better spot to build an emergency fund. I know that you wanna start investing as soon as possible, but before doing that, it is smart to build an emergency fund. You know, things happen, layoffs, car accidents, medical bills, and so on. So you better think proactively. I suggest you have at least 3 months of basic expenses covered, where for basic expenses, I mean your salary minus your saving rate. So with a salary of 2,000 euro and a saving rate of 25%, you're gonna look to have a basic expense per month of 1,500 euros. Multiply this by 3 and your emergency fund is gonna be 4,500 euros. I personally have a 6 months emergency fund, and some people suggest to go even further at 12 months. A lot depends by your personal situation and how many variables are into the equation. If you have children, if you have a car, if you have a mortgage. As I said, 3 months should be the bare minimum. Ideally, I would prefer to have 2 times the time it takes for me to find a new job, realistically speaking. In my last job research, it took me 3 months to get an offer. So I shoot for 6 months. Deposit your money into a separate bank account, far from your investments, and replenish this fund whenever you use it. You better worry than sorry. Plan your expenses. And this is something I had to learn the hard way. In 2021, I made a lot of money from my past brokerage job, but it was a freelancing job, and out of those money, I had to pay taxes on the June following. I was really optimistic and stupid, so I invested the vast majority of those money into a Nasdaq ETF, and I set the strategy something like 1 month before the Nasdaq started crashing due to the interest rates. As a reference, I invested here, and the Nasdaq started crashing 1 month after. I found myself in the following months with a 15,000 euro tax debt, and all of my money were invested into stocks that now were in red. I would have lost a lot of money selling at the bottom. Believe me when I say that debt is not fun. 1,000 euro may be not so much to have, but it's really a lot of money to own to someone else. So I found a second job, I started saving to pay back my debts, and I also pushed more on my first job. I've been able to pay that just recently though. But this situation was scary and stressful as hell, because on top of the fact that I was looking at my investments going red, I also had this pendulum blade on my head that was maturing interest against me. And in despair, not so long after watching Squid Game, I also understood something. If you have planned expenses in the next 3 to 5 years, do not invest those money. Things can turn bad in so many ways, so act accordingly and put this money into a deposit. Plan your big expenses, your taxes, your tuition in advance, and do not gamble those money. And finally, don't fall into the lifestyle inflation trap. Now, let's be optimistic for a moment. Let's say that everything is going good. You are making money, you are very good at your job, and you are on the pathway to get a promotion by the end of the year. Your current salary is 2,000 euro per month. But after the promotion is gonna be 3,000 euro per month, a sweet 50% jump. You're currently able to live comfortably with 1,500 euro per month. and you save 500 euro per month. But you're already dreaming with your eyes open about your new car, your new smartphone, and the new apartment in which you're gonna move. And you're right to do so. Treat yourself. But do not exceed. Don't let your expenses grow at the same rate of your income. Do not fall into the lifestyle inflation trap. You're gonna make 50% more starting from next year? That's great. Try to increase your expenses only by 25% and save all the rest. You initially have expenses for 1,500 a month. Now try to live with 1,875 euros per month and save all the difference out of your new 3,000 euro salary. This is gonna give you more cushion to create your emergency fund, to invest not only into financial instruments, but also in skills that you can acquire to make more money. Don't fall into the trap of spending linearly more when you make more, or even worse, exponentially more when you make more, especially in your 20s, since this is gonna be the time to build some solid foundations. But don't be even so tough with yourself. Ideally, I want to increase my expenses by half the percentage of the net salary raise I'm receiving. So if you're gonna make 50% more in net salary, increase your expenses by 25%. This will allow your saving rate to grow faster than your expense rate, giving you more room to invest into the markets and into yourself. So guys, thank you for watching. I hope you liked the video. If so, please leave a like and subscribe, and go check my other videos here. Bye!